Hi everybody, my name is Paul Buitink, and with a lot of fun and excitement we produce videos for Café Weltschmerz. But it's very important that we keep on doing this, and for that we need some donations. So please consider donating, check out the video details or go to the website and see how you can donate to keep us on air, in air. Hi everyone, today I'm talking with Jeroen Dijsselbloem. He's the former Dutch Minister of Finance and also the previous Chairman, President of the Eurogroup. We're going to do this interview in English because what Mr. Dijsselbloem has to share with us is not only important for people living in Holland, but of course for the broad continent. Welcome, Mr. Dijsselbloem.
Thank you.
You have written a book called The Euro Crisis. I have a Dutch copy right in front of me. Is the euro still in a crisis?
No.
When did the crisis start? Is it 2008 for you, the euro crisis, or 2012? Or 10 even?
Well, I think the weaknesses of the monetary union were already there, but they were exposed by the financial crisis. So after the financial crisis hit us in 2008, 2009, because there was a short recovery in 2010, 2012, but very soon afterwards, the big issues in euro countries as well as the monetary union as a whole were exposed, and we entered into a second crisis, a second recession, which popularly is called the euro crisis.
So if you could pinpoint the start date of the euro crisis, because the book is called The Euro Crisis, what would be the start date?
It's difficult to say because it was a gradual process, and it was also different per country, of course. But in most of our countries, we had to save banks, which took a huge chunk out of national fiscal capacities, out of our budgets, increased sovereign debt, made us very vulnerable in relation to financial markets, and in one after the other country that created lots of problems.
So in that sense, you could argue that 2008, when a lot of banks were saved, was sort of the start of the crisis for the euro.
It certainly was. It was a clear trigger of a process which then led to the euro crisis.
Yeah, and you just said that there's no crisis at the moment, or at least there's no euro crisis. When, in your view, was the end of the euro crisis?
Again, it's a gradual process. So over the course of 2013, most of our countries showed some recovery and growth started to return. Which continued in 14, 15. So in 15 and 16, I think in 16, all of our countries were back in growth. Maybe not in Greece. But so that was also a gradual recovery process. It took much too long anyway.
And Greece, is Greece still in a crisis, you think?
It depends, of course, how you define it. There's certainly still a social crisis, the economic crisis. I mean, there is growth. The budget is back in order, money is flowing back in, but there are still big issues in the real economy, in the banks, big social issues, unemployment still being extremely high.
Yeah, like a third of the population is still in poverty. 700,000 people, mostly talented people, have left the country. So there's a huge brain drain.
Yeah.
A lot of the banks still have a lot of non-performing loans on their books. If you look back, do you regret certain decisions in terms of how you managed the Greek crisis in 2015 especially?
Well, before answering that question, you have to be a little bit careful to suggest that the current crisis and the deep crisis that Greece had was caused by the European answer to it, was caused by the European programs. And you get this a lot in the debate. That yes, mistakes were made in the program. That's why Greece is now still in such a difficult position. I mean, you have to go back in time to realize that Greece had a huge increase in wealth, certainly wealth income per capita in the years before the crisis. So after the introduction of the euro and before the crisis started, Greece jumped up economically. And a lot of that was on credit.
Yeah,
now,
from Western banks.
from Western banks, certainly, but it was credit taken out by Greek politicians, Greek companies, Greek private people in their households. Now, if you use that credit to invest in setting up new businesses or expand your businesses, then that's fine. I mean, then it's a sound basis to take out credit. The biggest part of this credit boom, not just in Greece, but certainly also in Greece, was used for consumption purposes.
Yeah, so it was not sustainable.
Certainly not sustainable. No. And underneath were some really big issues in the Greek economy, in how the government and the political system functions, how the public sector is organized. And all of those big issues were becoming inevitable, that they had to be dealt with in this crisis, because there was no way that Greece was going to recover with this kind of economy, with this kind of public administration, with this kind of political system.
So there was a lethal mix of homegrown problems, but in my view also predatory lending to a certain extent by banks who overextended.
Absolutely.
And were built out, of course, during the first program in 2010.
Absolutely. So one of the biggest mistakes we made was that this huge credit boom that was financed primarily by German banks, French banks, some British, some Dutch, some American investors, that when shit hit the fan, the shit was shoveled into the Greek accounts. Whereas, of course, it was a risk for outside investors, and they should have carried some of that burden. They should have taken some losses. It didn't happen until mid-2012, but then it really was too little too late.
Yeah.
I mean, the remaining investors that were still indebted in Greece then took quite a major hit in sort of net present value. Almost 70-80% of their value they had to give up.
In the private sector involvement in 2012.
The PSI in 2012, but of course that group and the amount then was quite small. The biggest part of the loans were already bailed out with public money provided by European emergency funds, but they were provided by the Europeans, but the debt burden was on the Greeks.
Yeah, because now if you look at the debt to GDP ratio of Greece, the debt is higher than 29, so we are 10 years down the road. And back then we had a big debt problem in Greece, and if you purely look at the nominal figures, debt is even higher than 10 years ago.
Yeah.
With a private household, you of course have bankruptcy laws, and at some point you can write off some of your debt, because if someone has too much debt, it's usually a combination of the creditor overextending and the debtor taking in too much debt. But usually the creditors also need to take some haircut in order to give the debtor some time and space to grow out of its problems again. And the IMF was always very much in favor, at least privately and later publicly, for a proper debt restructuring. If you look back, would that be something you would have fought harder for in the past, for a proper debt restructuring?
The big bailout of the Greek banks happened already in 2010, which was before my time. And you have to realize that at that time, the IMF, which was then still led by Dominique Strauss-Kahn was not in favor of a bail-in at all. So the IMF has had very different positions.
Lagarde was.
Lagarde later on was, but then of course she excluded, which I understand, but she excluded the IMF loans. So everyone should take a hit, also the Europeans, also the public funds from Europe should have been haircutted in the IMF's view, but not the IMF loans.
Because normally before IMF gets in, there's restructuring before IMF gets in, and that was an exception with Greece.
Yeah. So there was a lot of criticism also inside the IMF on this. The IMF really had to breach its own rules. The IMF only wants to get involved in countries where there is the prospect of sustainable debt. And in Greece, you have to realize that already at the start of the crisis, the Greek sovereign debt was 120%. So again, it was a mix of major domestic problems in Greece already at the start of the crisis, and then some mismanagement, certainly at the beginning of the crisis, by bailing them out, which increased sovereign debt from 120 to 140, 150, etc.
And you think it's sustainable now, the way it stands, their debt?
Yes and no. It very much depends, of course, on what happens in Greece, but that's always true. I mean, if you make a calculation on future debt sustainability, you have to take into account what is the growth we can expect, what is the inflation we can expect. So growth is the key factor here.
Yeah.
The Europeans have done a lot to bring down the sort of the annual debt burden. So what is it that the Greek government actually has to pay annually on servicing their debt? And this is extremely low. There is no country in Europe that is at the moment paying less in terms of debt service than the Greeks. For example, the Belgians, who also have very high sovereign debt, over 100%, they pay much, much more per capita than the Greeks in servicing their debt.
Yeah.
So it's manageable.
But it's accounting gimmickry, right? Because I would argue that instead of extending the loans, their maturities, and maybe lowering the interest, why not just purely write off some of the debt? Isn't that the more honest way also towards other European citizens, that we're just being plain and honest? Look, this debt is unsustainable, so we're just going to cancel some of it, like a jubilee or.
No, I really disagree. The question whether debt is sustainable, serviceable, whether a country can actually service its debt, depends on three things. It's not just the nominal figure of the debt, which is very high in Greece. It's also about when do I actually have to repay, and the third factor is what is the interest I have to pay in the coming years. Now, if the interest is extremely low, and I don't have to repay or have to repay it only very gradually, then a very high debt can be very well manageable. So these three factors are important.
Maybe it's a psychological effect as well. If you see that some of the debt is just taken away instead of being amended, that also might help people in Greece to think, well,
but it will also
light at the end of the tunnel.
it will also have a really detrimental effect. So in economic terms, it makes no difference whether you cut the debt now upfront or whether you smooth it out over time. As you know,
it's net present value there.
It's net present value. Economically, it makes no difference. Politically, it does make a difference. Politically, I think there needs to be an understanding. And certainly also in Europe and in the monetary union, it's important that people understand if we borrow money, if I lend money to you because you're in trouble, that at one point in time you will repay it. Now, let's say that you've got in so much trouble that I say, okay, forget it. You know, you can keep the money. The next time I need to get public support in Europe, in the Netherlands or in Germany or in Scandinavia for loans to you, people will say, yeah, this is the same guy that last time said he would repay us, but we had to write it all off.
But then you might as well argue against bankruptcy laws, because that's the whole concept of bankruptcy laws, that you give someone a second chance.
No, I think there's a big difference between public and private involvement. So public involvement, yes, I believe in solidarity, but it has to be on the basis of trust and understanding. The understanding is if two countries support each other, then that money will be repaid. It may take a very long time. We have examples from old loans to Cuba, to Argentina, many decades ago, which are still being repaid today. There are many examples of this. This is why we have the Club of Paris to sort this out between countries. The real issue is private involvement. So next time, when European banks or international investors put their money in a country like Greece and things go badly wrong, then these private investors should carry those risks, because that's what their business is, to manage risks, to try and make money out of that.
Yeah, and that's what the template was in Cyprus, right? To make sure that next time private investors first carry their burden before the taxpayer is called upon.
So Cyprus was the big turning point, because this was the beginning of 2013, and between 2008 and 2013, banks had been saved with public money everywhere. I mean, everywhere in Europe, and of course also in the US. In different ways, but a very costly way in Europe. We didn't really go into the banks and really sort them out, so we just put more money in. It was extremely inefficient. Cyprus was the first time when we said, we're not going to do it again. And of course, there were specific reasons in Cyprus. The Cypriots have very often said, we were the guinea pigs of Europe. We were mistreated. Everyone else was saved, but we weren't. And in all honesty, that's true. Cyprus was treated for the first time differently, but there were good reasons for that. The disbalance between this small island's economy and this massive banking sector was one. The second one was the huge losses in this banking sector. It was completely unsustainable, this business model. And the third factor was that they had been drawing in huge amounts of foreign funding, deposits.
Russian funding.
Many of which came from Russia, many of which were quite unclear what the background of that money was. And there was also a lot of criticism on money laundering in Cyprus. So there were real reasons why the Europeans said, sorry, we're not going to save this banking sector the way other banks have been saved.
Yeah, and then because of Cyprus, you were also, I think, inspired to start working on a banking union. Or it was already, of course, being designed, but Cyprus provided you with ammunition to, I guess, to sort of come up with how it would really work in practice. Now
I think, in all fairness, the decision to have a banking union was already taken mid-2012, but there had been very little progress and lots of disagreements. One of the disagreements was about who's actually going to pay the bill? Who's going to pay the bill for all these losses in all these banks?
Which is still the question 6 years later.
No, I think we've made a fundamental choice here. The discussion then was, should the bill be paid by national governments or should it be paid by the European Union, which is, of course, 28 countries together. And, of course, that was stuck immediately between the South and the North. The South said, look, we have to do this together, otherwise we'll go down. And the North said, well, I'm very sorry, but this is your own private problem. The only way to unlock it was to change the whole debate and to say, no, it's not about public national or public European, it's about public or private. It's predominantly a private issue. It's a private investment going bad. And that's why we introduced this, and Cyprus was the first time, the principle of bail-in rather than bail-out, which then was also put into the banking union and allowed us all, certainly in the 19 euro countries, to agree on bail-in must be the principle when you are part of the banking union.
Yeah, so that gave us the single supervisory mechanism for the big banks, amongst others. It gave us the single resolution fund, with which banks are being resolved in an orderly fashion. And the third step would be the European Deposit Insurance Scheme, and that is not moving anywhere as far as I understand.
Yeah.
But then look what we see now in Italy with the bank Carice. You also wrote your article about it the other day. But that seems like another example of how these European rules don't seem to work for some of these countries. So like in Italy, even though the five-star movement was very much against bailing out banks, here we see a small bank, relatively small, and not at all a danger for the system, and it's being saved again on the hook of where taxpayers are on the hook. So what's your opinion on this situation, especially for people who didn't read your column about this?
So first of all, the position of the five-star movement and also Lega is very difficult to understand, because basically they're saying we don't want to bail out banks, but we also think bail-in is very wrong.
Yeah. So
and in between there is very little alternatives. So what's going to happen to the Carice bank? I don't know. It's still very much undecided. What happened in the MPS case, Monte Paschi di Siena, was that the bank supervisor, the ECB, said this bank is still solvable, in which case there are circumstances in which a government can do what is then called a preventive recapitalization. It's not actually in trouble yet, but there could be trouble. The government may participate in the bank. But only then, of course, there are state aid rules, and the European Commission, the state aid commissioner, said, well, we will only allow that if you do a bail-in first. So in MPS there was a bail-in of 7 billion before the Italian government could put in 5 billion. So there are still, these European rules are still very important in every Italian case.
Yeah, but still the government does put in taxpayer money again.
Yeah. So this is a small possibility that's in the European rules, which is
going to be exploited, of course.
Well, this is of course the risk. Now, how can we make sure that it's not being abused, this small exceptional possibility? What happened in MPS was that there was no asset quality review, a deep investigation in what the real value of the assets of this bank were. So the decision to say this bank was solvable is quite questionable. How can you say the bank is solvable, for sure, if you haven't done the asset quality review?
But it's highly debatable anyway whether the ECB or the institutions are able to properly assess whether a bank is solvable or not. Because I remember, I think Dexia, didn't Dexia pass a stress test just before they had to be bailed out?
Well, stress tests are different from AQRs. Stress tests are pretty superficial, and yet they are more intense because they introduce stress scenarios and they test what's going to happen to this bank in this stress scenario. And AQR is something else. It doesn't work on scenarios. It actually goes into the bank. It looks at what are the assets that you have, the different portfolios, what are the value of these assets, what are the possible profits, and what are the possible losses that you have to carry. And are you able to carry those losses?
And I guess that's exactly
this is much deeper. Now,
if there is where the Northern European taxpayers are afraid of that, it's still very. I think most of them will probably think that the assets of, for example, Italian banks are far from good. Let's put it that way. Also, there's a lot of Italian bonds being on the balance sheets in Italy. And they're still being treated just like a German bond, for example, when it comes to capital requirements for those banks. As long as there's this doom loop between the government and the banks, and the Italian banks keep having all these bonds on their balance sheets, and they have all these non-performing loans of households, I don't think the banking union has a chance to be completed, because no one is going to sign, in the north at least, a blank check to what's going on in the south. Do you agree, or do you think there's still a chance that the banking union will be completed anytime soon?
Politically, it's very difficult, but if you look at it in a rational way, I think that having EDIS, this European Deposit Insurance Scheme, would be very welcome, and I think we have to move forward.
But why?
Because it gives the last factor of confidence that we need in the European banking sector, because it allows for investments cross-border and liquidity.
But it doesn't give me the confidence as a Dutch taxpayer that I'm going to be liable for these assets in the south on balance sheets there.
You're not liable for assets in the south. The only thing that it does, and of course on the basis of all the banks paying in premiums into an insurance scheme.
Yeah, but that's not enough in Holland. We're going to pay up until 1% in 2024, I think. If one of the 3 Dutch banks go bankrupt, there will not be enough fund in this deposit insurance. We saw that in Iceland, was not enough. Cyprus, there was not enough. Lithuania.
A lot of things have changed. I mean,
but would you say there's enough in the Dutch deposit insurance fund? Let's say if ING goes, it's not going to happen, but let's say one of the big Dutch banks is going to go bankrupt. Do you think there's enough money in the fund anytime soon to be able to cope with that loss?
There's a lot of questions at the same time. So one question is, at that time, there were no pre-funded deposit insurance funds. No money set aside at all. In Cyprus, there was nothing. Yeah. So the whole guarantee, we will guarantee you 100,000 of your deposits, that whole guarantee was fake. There was nothing there. And the same was true for the Netherlands. The second point is that a deposit guarantee system works predominantly well for middle-sized banks. For the very big banks, you simply want to close them down with a guarantee and, if necessary, very gradually resolve them. Third point is that we are now building these funds so that the deposit insurance scheme is actually materially there.
But you're saying it's only for the middle banks in a way. So, but we have a lot of big banks. I think like 80% of the assets of all banks fall under the big banks and on the single supervisory mechanism. So why are we building an EDIS if you're already saying it will not be enough to save big banks? We might as well just not have EDIS at all then.
It's the other way around. If you have EDIS, that means that all these national funds, which are now still national, are joined together to one big fund, which will allow you a capacity to intervene, which is much bigger than any of these national banks, national funds can ever do. But the real thing is that you should always not use the fund. It has to be there as a guarantee, as a sign of confidence to the markets, to depositors. You don't have to run to the bank.
Yeah.
There is an insurance and there is a backup. And behind that backup is even a guarantee from the ECB or from the ESM, the way we've done for the resolution fund.
But isn't the resolution fund and the lender of last resort facility of a central bank, are these two, like the single resolution fund is already, of course, a big fund. Then we have the ECB with infinitive capacity to create money. Isn't that enough to backstop the banking system? Do you really need a deposit insurance scheme if you already have the other two pillars?
I think that it's high time that the banking sector can save itself.
Right.
And there are different ways to do it. One, of course, is to make sure that they are well funded, that they have enough capital within their own banks to deal with their own losses, to make them more stable. And another one is to make the banks, and this is what we're doing, put money aside for resolution cases and for deposit guarantee.
Yeah.
Pre-funded, not asking for the money when the crisis has hit us, because then there is no money. You must do it when the time's right, and the time's right now. So now we are filling these funds.
Too slowly, I guess. If I look at, especially in Holland, let's assume EDIS is not going to be implemented anytime soon, then most of these countries have only 1% of deposits in the fund. Doesn't sound like a lot of comfort.
But you're still arguing on the basis of the last crisis. In the last crisis, the capital ratios of banks were almost zero. In the last crisis, we had no ways or no political will or not the guts to make the private investors pay for the losses in the banks. If you do all these things, if you have good supervision, which acts early and not too late, if you have enough capital in the bank, if there are losses, you make the private investors pay, then the scenario of banks falling over has become so much more unlikely. And then a fund of, let's say, 50 or 60 billion at a European level could very well suffice. Should we have had 60 billion in 2008, it would not have been enough. You're absolutely right, because we had no good supervision, no capital in the banks, no bail-in principle, no BRRD. Yeah. All of that was not there. If you have these things, then my point would be that having 60 billion in a potty put away is fine.
And you're also in your book, you often write that you think private investors need to take the risks, like you also mentioned already this conversation. Back in the day, deposit insurance was not that high. In Holland, we used to have 20,000 plus 20,000 with 10% own risk. Then in 2008, of course, we went up. I think because the Irish led the way, they went to 100,000. Now 100,000 is the new norm. Following your philosophy that people should just take their own losses, wouldn't it make more sense to lower the insurance threshold? And that way you also need a smaller fund, and you would also reduce moral hazard, because then people would be forced, as they should, I think, also forced, they're motivated at least, let's put it that way, to look into a bank, and then you would probably, there would be new organizations that would rate banks or that would help consumers pick the right bank. But then you would actually also stimulate banks to be more prudent, to be more transparent. And of course, you need some insurance for the let's say 10,000, 20,000 for people's primary savings. But anyone who has more funds than that should be able to think about those things himself.
Theoretically, 100,000 is quite high. Politically, it'll probably be impossible to bring it back down again, because there's now this expectation.
But we can manage that, right?
The reason for it is, of course, that there is a big difference, I think, between investors, which in my definition are professionals who should be able to manage their own risk, should understand what they're investing in, and a deposit holder. And a deposit holder should, if the banks are well regulated, well supervised, well capitalized, a normal deposit holder, a normal consumer, private person should be able to trust a European bank.
Yeah, but we expect a normal consumer to review 10 different televisions before he buys one, but we want him or her to be in the dark when it comes, or to say, well, completely trust on us, we can manage this. We've seen so many times in the past that the assessment of the regulators was wrong. Already, if you now see...
But then the real issue is then that
need people.
In your example, that the regulators are not doing their.
aware.
No, the real problem then is that the regulators are not doing their work. And I think that European citizens should be able to trust the ECB, the bank supervisor, to be on top of these banks and to make sure that they are safe.
Yeah, but they haven't inspired trust. The ECB and the others. Of course, ECB has done everything they could to save the euro, like Draghi said. But time and again, people see banks in trouble and complicated schemes being designed to save yet another bank. So people don't have this trust yet.
No, but you're asking these same people to be able to understand and to see through the bank balance sheet and to be able to judge whether this bank can be saved. Now I have.
Well, they get a reward. They get interest rates, and they will then try to find a bank that would best suit their risk profile. Like if they want a safe bank with little interest, well, they go for the safe bank. And I mean that choice is up to the consumer, right? Whether you want the risk and reward needs to be in balance. And if you blanket guarantee everything, then all the banks will there will be a lack of incentive both from the banks and as well as from the consumers to be responsible.
So you want the real market principle to come into force.
I would love to. Yeah.
The consumers should be able to judge whether that bank balance sheet is safe. Yeah. So in that case, we could get rid of regulators because it would simply be up to the consumers. I think that is very naive. I don't think that consumers are in a position to judge whether a bank is safe or safer or the safest. We do the same for food safety. The Dutch consumer should be able to go into a supermarket and buy all the products on the assumption that they are safe. And we have lots of checks and regulations and supervision on this, on food safety. You cannot say, well, it's up to the consumer. He should decide what is safe. That will be a great market incentive for producers to make better products.
Yeah, but the consumer can buy something cheap, which is awful and doesn't taste nice, and they can then afterwards say, look, this is not my cup of tea.
But the minimum safety should always be.
But it can be lower, I think. Well, we can. But it's a nice bridge to.
There is one interesting angle to take. I think that the minimum should be guaranteed, and that's why we should have minimum capital requirements and all kinds of minimum regulations for banks, etc. On top of that, of course, you can say, well, I would like to have a really safe bank. So I would like to know what the leverage ratio of banks is. Why don't we have that public? So that's now made public. Some years ago, we didn't know that. That wasn't made public.
Or give citizens access to the central bank balance sheet. You don't have a lot of proposals about central bank digital currency or about a full reserve bank. Is that something you would be willing to try? Back when you were a minister in Holland, you would not. You wanted to wait for a governing council, scientific council's report, which is due this week, about whether it's feasible. But would you, if you would have the chance again, would you try to experiment with giving citizens digital cash, access to the central bank balance sheet?
Having a real reserve bank with very low risks is possible. I would actually be in favor of it, also to create more diversity and more choice for consumers. But there was one hiccup that we haven't been able to solve, and that is that all European banks must contribute to the deposit guarantee. Yeah,
but if there's no credit risk, then they don't. This bank doesn't have to.
Exactly, that's exactly the debate they had. So the people that were advocating this new deposit bank were saying, but there is no risk.
I was one of them.
So why should we have a premium for the deposit insurance? The problem is that in Europe, to make sure that everyone pays, we said everyone has to pay. Full stop. So this debate will continue. It would require European regulations to be changed and to allow for this exception.
And what about like central banks offering their balance sheet directly? So I have, for example, I would have a digital wallet with a central bank. Would that be something to try, you think?
It's difficult for me to say. I think in the future, digital money, even digital currencies could play a very different role than we can envisage now. And then there are much more fundamental questions about the role of the central bank and the role of commercial banks. Do we still need commercial banks? I mean, these are in the future, everything would change.
But now,
could change.
For example, what would you do now if you would be a central bank president? Would you
I think there
allow
are,
for experiment?
I'm very hesitant to experiment certainly with digital currencies because they are very unstable and much more have become mainly a sort of investor's gimmick.
We are referring to cryptocurrencies now.
Yeah.
Yeah, but I meant more like a euro, digital euro for consumers and businesses to have directly a wallet. Like I have my cash, of course, my notes in my wallet, but I would then have a wallet directly at the central bank's balance sheet.
Let's wait for this report that apparently comes out tomorrow. I asked for it already, I guess more than a year ago. I'm not even sure.
Longer, yeah.
So it comes out tomorrow. My key objective was to make the banks as we know them much more safe and much more oriented towards the interests of the customer and less risky to customers and to the society. So I had so much work on my hands dealing with these banks as we know them now. Perhaps we've spent too little time about what could we do very differently in the future.
Yeah, that's.
But
I think it's a good
the debate took place in the parliament.
But do you think the banking union has a, or let's put it more broadly? Do you think the euro has a bright future ahead of it, or do you believe it will be very difficult, especially considering what's going on in Italy with the new government there, that it will be very difficult to take the necessary steps to complete the banking union?
So I'm an optimist. I believe that as long as we're making progress in the right direction, I will remain an optimist. So very recently in December, there was a deal in Brussels on new elements for the banking union. One was to have a backstop to the resolution fund. In other words, if the resolution fund for banks is depleted in a big crisis, the ESM can then provide more funding to that fund. There was no agreement on the deposit insurance scheme yet, but everyone knows it's going to come. The question is only what timing and under what conditions. Obviously, with the current Italian government saying that the banking union is all wrong, there should be unlimited European funding for Italian banks. This is literally what
they said
Salvini
this week,
is saying this week. Of course, there will be no deal. But is this Italian position forever? Is this Italian government forever? I don't know. The public support for the euro, and I think this is key also to estimate political support, the public support for the euro and the eurozone is still very strong. And it's actually been increasing again in the last couple of years.
But a lot of people say we need a political union in order to make the euro work. In your book, you're against that. You don't think it's necessary. Do you still believe that? Are you still of the same opinion that we can make this thing work without becoming a political union?
Yeah, so the whole concept of a political union is of course quite unclear. What does that mean? Does that mean that everything is decided in Brussels and by whom? Do we really want our social security systems, our healthcare policies, our education policies, all of that to be shifted to a European government? There is no support anywhere. So then the question is it really necessary to make a monetary union work? I don't think so. I think one of the biggest things missing, first of all, was this banking union, to have an integrated banking sector, well supervised, with good rules, etc. The second thing is capital markets. We really have underdeveloped capital markets in Europe. We still depend, for 80% of our economy depends on bank financing, and capital markets are very small. In the US, it's the other way around. It's 80% from very diverse and very flexible capital markets. So I think that needs to change also because in a economic crisis now, if there is a crisis in the real economy, it immediately hits the banks because 80% of the funding comes from banks. Then governments immediately panic and say, oh, we must save the banks because otherwise our economy will go down the drain. In the US, it worked quite differently. The shock to the system was much more diverse. It went into capital markets and private investors took a hit. They take their losses much quicker and much easier than these concentrated losses and risks in the banks.
Yeah, I understand
So
the need
these are
for the capital market.
If you really want to make the monetary union stronger and flexible and being able to absorb shocks, then you need much more capital markets.
Yeah.
And it's not sexy. You hear very little very few politicians talk about it. It's very sort of technical, economic, but this is the real
Also because they have
challenge.
more pressing things on their mind, especially now in Holland or in Europe with the yellow vests. You joined En Marche, the movement of Macron. Am I right? Are you still part of that movement?
It's now, at some point it became a political party, and I never became a member of his party.
Okay,
so
but,
I, as a sympathizer, by the way, this.
But he wants a political union in Macron. So
Yeah.
you think he's impressive? That's what you said in the book.
I had.
So you differ. Your opinion is different when it comes to the shape of the European Union or the euro. But
I knew Macron some years ago, and we had a number of meetings and discussions also about Europe, but also about what was going on in France. And I thought, and I think he's a very impressive politician with a huge drive, wanting to modernize France.
But he has 25% approval rating at the moment. So as a politician, he's not doing such a good job, I would say.
To be honest, I'm not interested in that. I've left politics. I'm just looking at what he's doing. Is he doing the right things? And I think he, for France, was doing the right things and still is. So he still deserves support from the rest of Europe. We always had a difference of opinion about the perfect Eurozone setup. His views, and I also told him this, are very traditional French. So I said it's quite disappointing that someone who really wants to modernize France, when it comes to the Eurozone, comes up with these very traditional French points of view. So, I mean, already Mitterrand said the same thing, Sarkozy said the same thing, Hollande, and now Macron. There needs to be an economic government for Europe, there needs to be a finance minister for the Eurozone, etc., etc. And I said, what is it that you really want them to do? And of course, we didn't agree about this. So I challenged him and I said, do you really think that a European finance minister could reform the French pension system? And would the French population allow that? It's already very difficult for Macron. Now imagine that Jean-Claude Juncker decided on the pension reform in France. It's just impossible. Yeah. And again, it's not necessary. The real key issue is about creating, next to the banking union, these capital markets, which will make the European economy much more stable and much more dynamic.
You mentioned Juncker. What do you think of his performance now? Because in the past you have high praise of him in the book, but at the same time you called him a heavy drinker in the past. What do you think of him as a politician?
An unfortunate joke.
Was it a joke or was it just describing reality?
It was an ill-timed, ill-formulated joke. And I really regret it because he had a lot of trouble after that. In a lot of media, he was...
But have you seen his recent performances? Have you seen him in public? Quite a few times he actually he's not making a very sober impression in some of his public performances.
No, I disagree with that. I think that's nonsense. I think that he has some physical problems.
His back.
Which are really true, because I remember that already in 2015 and 16 in meetings, he really had pain from his back and other medical issues. So I think this whole... Anyway, it's not even interesting enough to talk about it. I think that Juncker, when he came in, he said this would be the Commission of the last chance. Now, I don't believe that, because there's always a second chance and there's always the third chance. And I think what he meant was that Europe needs to get into the heart of people again and become popular.
Yeah.
That's very difficult as a starting point. If that's the outcome, then that's great.
But they should show an example, right? Like I think Brussels politicians should show a good example. They should act, and then people should be inspired. Like Juncker once said, of course, that when it becomes serious, you have to lie. He knew about Greece, that it would probably not be a good idea for them to join the euro. All of these saying of all of these things he doesn't say, they don't necessarily inspire a lot of people within Europe to follow Brussels. Don't you think there's also like a disconnect between what's going on in Brussels and what's happening across the member states?
No, I think the biggest problem is not Brussels or the Commission or Juncker. The biggest problems are national politicians which are unable or unwilling or don't have the balls to sort out their national problems and then start blaming Europe and blaming the Commission. And this happens again and again. The current problems in Italy are not caused by the Commission or caused by the rules of the banking union. They are fundamental about the economy in Italy. And other countries are doing economically much better. They have made changes, they have modernized, they have opened up their economies, and they are showing much higher growth, and Italy got stuck at, 0.5% growth, or now even back into recession. This is due to national political choices. The real issue is that no one ever stands up for Europe or the Commission. I've also criticized the Commission on a number of occasions, decisions regarding budgets, etc. But the fundamental thing is that the Commission has to guard and stand up for the rules and the agreements that we have together. And everyone is always trying to fiddle out, to have their own way and their own little advantage. So my message is, don't blame Europe. Ask yourself what you should do for your country.
Go vote in May. I think that's...
Well, that could also help.
And to wrap up, personal question. You have been spending the last year like freewheeling in a way, writing a book, being out there and giving interviews. What is your next step? Because I'm sure you're not going to do this forever.
No, I decided to do that for a year, and this period actually ends, I think, today.
Okay, so that's very timely then.
Because I left the Eurogroup mid-January last year, so the year comes to an end.
So this is the last interview you do for...
this is the last interview. I have to get serious, I have to get back into a job, and you'll be the first to know. Okay, so maybe like Barroso going to Goldman Sachs, or? No, on a serious note, I think that too many ministers, too many central bankers go to the financial sector. Yeah, which is not. And there is, even if they do that while guarding their integrity, there is again and again the question whether the politicians were already in the pocket of the banks when they were in the job. The optics are bad anyway, right? It's a bad signal, and I think that's why I've said I will not go to the financial sector. I've been the architect of lots of bank rules, and I don't want all the work that I've done to be questioned. Exactly. Because I've made the step into the financial sector. People will say, so that's why he wasn't tough on the banks. Yeah, right. So no revolving door for you then? No revolving door. Okay, well, I'll wait for your message then to see where you end up next. Thanks a lot for making the time available, also to talk to alternative media. I think that's very laudable, and let's keep in touch. Thank you. Okay.